Good afternoon, everyone. Thank you so much for joining us today to learn more about wills and estates. Before we begin, I want to take a moment to acknowledge the importance of the lands that we live in and that we call home. I am coming to you from the traditional territory of the Mississaugas of the Credit, the Anishinaabeg, the Chippewa, the Haudenosaunee, and the Wendat peoples. From coast to coast to coast, we acknowledge the ancestral and unceded territory of all the Inuit, Métis, and First Nations people who call this land home. We also acknowledge that Toronto is covered by the Treaty 13 with the Mississaugas of the Credit. We do this to reaffirm our commitment and responsibility in improving relationships between nations and to improve our own understanding of local Indigenous peoples and their culture. Hello, everyone. My name is Kate Hicks, and I am the Senior Manager of Plan Giving here at Diabetes Canada. I've been working in this field for over a decade, passionately dedicated to helping individuals and families navigate their estate planning needs. I joined Diabetes Canada in February 2023, inspired by a personal connection, my father, who battled diabetes for over 30 years. At Diabetes Canada, I'm honored to collaborate with generous donors who leave legacy gifts in their wills, which enable us to advance our mission of finding a cure and supporting those living with the disease. Now, I'd like to cover a few housekeeping details. This webinar is being recorded, and a copy of the recording will be shared with you afterwards. Everything will be live and interactive. Both the Q&A and chat function are open in Zoom, so please enter any questions at the end if you can, and anything that you have, and I will ask them on your behalf. The chat is visible to all participants. If you remain anonymous, you wish to remain anonymous, the Q&A function located at the the bottom of your screen is only visible to speakers. If you have any inquiries about Diabetes Canada, feel free to reach out to me directly. I've shared my contact information in the chat, and I will put that in there again just so that everybody has it. Okay, thank you. Now, it is my pleasure to introduce our guest speaker, Matthew Urbeck. Matthew is an experienced, creative, and passionate estate litigation lawyer. He practices in estates planning and administration, drafts wills and powers of attorney, and acts as an estate trustee, where he uses his litigation experience to better assist his clients in achieving their goals. Matthew also practices in the areas of general, civil, and commercial litigation. Ranked by his peers and best lawyers in the fields of trust and estate, Matthew is also a respected and sought-after contributor as a speaker and writer about current issues in estates law. Outside of his professional life, he enjoys sports, traveling, and spending quality time with his family. Please join me in welcoming Matthew, and I will pass it over to him.
Welcome, everybody, and thank you for joining us today. As you know, the presentation today is titled Wills 101, Tips and Practices for Successful Estate Planning. Before I get into it, I want to thank all of you for being here today. I want to thank Diabetes Canada for having me. And once again, I appreciate you taking some time out of your day to listen to what I have to say. So let's get right into it. So there are 5 topics largely that I'd like to cover today. First is why bother? Why go to all of this trouble when it comes to planning and working out your estate? And that leads me into the second question, which is, what went wrong? And in this situation, here in this section, I'm going to talk a little bit about some actual real life situations that went astray and from my own practice. So this is also going to help answer the first question, why bother? Why make sure you have a good estate plan? We're going to talk a little bit about choosing an estate trustee and executor. We're going to talk about the duties of that estate trustee or executor. And then to conclude, I'm going to talk about how you can certainly give to charity, without necessarily sacrificing your other goals. So you can do it all, so to speak. So let's dive right into it. Why bother? Why go to all of this trouble in planning your estate? So a few reasons. The first is some people are a little surprised to hear that if you don't have a will, how your estate is administered is set out by the government, and that's set out in law. There's a specific law and hierarchy that is set out in the event that you don't have a will. And your estate is administered and distributed pursuant to the sections of what we call the Succession Law Reform Act. So if you're married and you have no children, your spouse gets everything. If you're married and you have children, there's a formula that sets out how your estate is divided amongst them. If you're not married and you don't have children, you can go parents, siblings, nieces and nephews, and all the way down the line until the last recipient is the crown, the government. So you may not be surprised to hear that many people don't find it particularly savory to believe that there's a chance that the government will end up with their estate. What's also important to note is that if you have charitable intentions or charitable wishes, those are not fulfilled when you don't have a will. So charity is left out in this scenario. Why should you even think about estate planning? What is the purpose of it and why does it help? Well, again, as you heard earlier today, I do predominantly litigation. I deal with situations when things have gone wrong. So when there isn't a proper estate plan, I find that so many family members, friends, etc., end up assuming what the deceased wanted, which can lead to all sorts of unfortunate feelings like family resentment, feelings of inadequacy, competition, hurt feelings, jealousy, anxiety, a lot of unknown variables there. So if there are issues within the family, especially if they're issues that have not necessarily come to the forefront, well, an improper, I should say, estate plan isn't necessarily the cause of these issues. It can certainly be a factor that causes it to boil over. Needless to say, a lot of people want to avoid that. I'm often asked about some of these online tools, some of these wizards online that you just input your data into and will spit out a will for you. Is there a good reason for using them? Is there a good reason for avoiding them? So just like in most things in the world, there are certainly benefits and there are some drawbacks. So I should say that there are some benefits. If you do use one of these online tools, often they are quicker and they are cheaper than going to see a lawyer. If you have coordination problems or a very busy or difficult schedule, you don't necessarily have to find a specific time to meet with a lawyer or a legal professional in that sense. So you have a little more flexibility there. I should also mention that Diabetes Canada does have a partnership with one of these companies, Willfora, which will provide a simple will free of charge. And I suggest that if you're interested in that, you speak with a representative of Diabetes Canada, and they'll give you a little more information about that. But at the same time, there are some drawbacks and risks to using an online tool. If you have something that's a little more complicated, for example, or you have some questions or have some concerns, you don't really have a point person to answer those questions or concerns. Now, wills have a very specific way in which they have to be executed and certain formalities that they have to follow. And if you make a mistake with those, it can cause a lot of problems for your estate and your executor down the line. So it may be that you're making things a little bit easier now, but correspondingly making things harder down the road. Oftentimes, without using a lawyer or a legal professional, you're a little more vulnerable to a dispute down the road. Again, this could be more of a problem down the line than currently. And if you do make a mistake, as I found in my own practice, that has to be corrected in court. And I found that certainly things that pop up when it comes to using an online tool may have to be addressed in court later. So these are all things to keep in mind when you are deciding whether an online tool is right for you. So that takes us to our next section here. What went wrong? So Here I've taken a few examples from my own practice. I've changed some of the details and so I would like to talk about what in particular was the issue here and how you may avoid it, just to illustrate that a properly prepared will and a properly executed estate plan is especially important. So let's take a look at this first example, just where simple proofreading would have made a world of difference. So here's how the will that I looked at was addressed. So it said, my property to my son, Jonathan. If my son is deceased, my property to the children of my son, Jeffrey. So to Jonathan, or if Jonathan's passed, to Jeffrey's children. But if my son Jeffrey has no children, my property to my son, Jonathan. So if you look at that here, we're in a big circle. It doesn't seem to make any sense. Obviously, there's a mistake here. So when we looked into it, we realized that if you change a single word, the entire character of the will is changed. So here, we've replaced the first Jonathan with Jeffrey. My property to my son, Jeffrey. If my son is deceased, my property to the children of my son, Jeffrey. And if my son, Jeffrey, has no children, my property to my son, Jonathan. So here, all of a sudden, it makes sense. Jeffrey, then Jeffrey's children, then Jonathan. So simple proofreading would cause all of this to be avoided. Small errors indeed can change the entire character of the will. It's really important that you take a look at your will periodically to make sure that it still makes sense and the beneficiaries of your will are still in place. So look at this example. In a will made in 2016, the individual gifted his property to Alpha Beta Inc. In 2020, Alpha Beta Inc. split into two corporations, Alpha Corp and Beta Inc. The individual passed away in 2024. Who receives here? So here, we had to go back and try and figure out what the deceased's true intentions were and what the nature of their allegiance or interest in this corporation was. So it was a humongous undertaking to try and figure out. It's also important that you know your assets. One more example here. Of course, I've changed all the details. My investment account 123 shall be provided to Charity X, provided that the total to be paid to Charity X from this account and my other accounts shall not be less than $1 million. Here, the entire estate was worth less than $1 million. So one party here argued that if the full amount of the gift cannot be made, no gift should be made whatsoever. Should a charitable intention be defeated because of the estate value? To me, it doesn't make sense that if an estate has less than $1 million to give, they should give nothing, but that was an argument that we had to face along the line. Now, I should say that Diabetes Canada does have a specific will guide to assist in your planning, and it is a good idea to take a look at things like that before you visit your lawyer. It's also important that you think about your nomination of estate trustees. So I found problems arise when a will may fail to name any estate trustees if there's no alternate named. What if you name an individual, a parent or a friend who has predeceased you or has not able to act? Then what happens? I've seen situations where two estate trustees are named, but they can't get along. So what happens in that case? I've also had a situation where an estate trustee was nominated, but their fee was specified in the will, and that estate trustee was not happy with that fee. So what happens in all of these cases? It's a good thing to make sure that you think about this in quite a bit of detail before you complete your will. And again, I'll talk a little more about estate trustees shortly. So, in summary, in this section, make sure you plan. Really important to do so. I've also had a situation of a will drafter passing away on the very day that they're scheduled to sign their will. So it is a bit morbid to say, but it is really important to make sure that you do it because you don't know what tomorrow's going to bring. It's important to be comprehensive. You have to make sure that all components of a properly prepared will are included. And once more, it's a good idea to take a look at from time to time. Something that's accurate and complete now might not be so down the road. That takes us into the next section, choosing an estate trustee. So an estate trustee, or an executor, as it's sometimes called, is the person who is tasked with administering your estate after you pass away. So what should you look at when you're trying to figure out who's a good choice for your estate trustee? Well, you have to pick someone who will agree to do the job, who's capable of acting. If you've ever done it, you'll know that it is a big job, it is onerous, but it is important that whoever you name is capable and willing to do so. And it is important also that they should know when to ask for help if they do approach something or are faced with something that they don't necessarily know how to tackle. Certainly you want to pick someone who's trustworthy and reliable. It's unusual but known to happen that people run off with the assets. Certainly you don't want that to occur, so obviously you'll want to pick someone who's trustworthy. And lastly, because there's a lot of math and numbers and business decisions often involved in administering an estate, you don't want to pick someone who runs in the other direction at the first sight of math and numbers. So pick a person or people who have a certain degree of financial savvy. Other things to keep in mind when you're picking your estate trustee. Think about the number. Naming one may make things more efficient because they don't have to deal with other cooks in the kitchen, so to speak. But if you have multiple estate trustees, that's less of a burden for each of them together, although they may have conflict as between them. Every situation is different. Always a good idea also to name an alternate in case your first choice isn't available or isn't willing. And just for obvious reasons, often a good idea to name someone who's younger than you, either as the primary or alternate choice as your estate trustee. And once more, again, I'm stressing this point in a few sections. It's a good idea to look at. It's a good idea to review from time to time, because who you choose today might not be the right choice tomorrow. So what about choosing a professional estate trustee rather than naming a family member or a friend? What about naming a professional? Now, the good thing about naming a professional like a lawyer, an accountant, an estate trustee, a trust company, is that they'll have done this job many, many times before. So they'll know what they're doing. They'll be able to hit the ground running. It may be that your choice of a family member or friend hasn't done this before, may be uncomfortable with the role. The good thing about naming a lawyer, an accountant, or a trust company is that if there is any conflict within the family, they have an impartial view. They're a true third party and will make sure that they don't put themselves in that dispute, which can be ripe with emotion. Now also, with a lawyer, accountant, or trust company, they could have a clear fee schedule. It may be a lot more clear what they're necessarily going to charge. However, a lawyer, accountant, or trust company, a professional, likely a stranger to your affairs. There may be a higher learning curve, or it may be more difficult for them to get up to speed. So with that, let's talk a little bit about what an executor, what an estate trustee does. Now, this is not meant to be comprehensive. I'm going to summarize greatly in many steps, but it is a good idea to just have a bit of this overview. So it helps help you ideally figure out who you want to pick and the nature of the job as well. So the first step for an estate trustee is largely fact-finding. Find the important documents. Is there a will? Is there a death certificate? How about other contracts, debts, any other important documentation that you need to find? It's really important that your estate trustee gets a handle and hold on all of this. Then it's a good idea for your estate trustee to tell the world, so to speak, about their role and the fact that the deceased has passed away. So that involves a lot of notification, talking to banks, other financial institutions, insurance companies, credit institutions, other investment accounts, and also some communication with beneficiaries as well. The beneficiaries being the parties who are entitled to share in the estate. Who's getting the estate? And this is very closely linked with the prior section, identify. You may have a list of assets, you may have a good beat on where everything is, but you may have to do a little bit of fact-finding also. It may not be obvious. Now, when it comes to general administration, again, these are just overview points. I've put CRA, Canada Revenue Agency, as its own category here because dealing with them is a whole other situation that estate trustees most often have to concern themselves with. So it's important that the estate trustee gets recognized as the estate representative, deals with all of the outstanding tax matters, which can be numerous when it comes to administering an estate. And then dealing with the assets. Are assets held in a certain form? Do they have to be sold? Do the funds that your estate trustee is holding, does that need to be invested? Do certain debts have to be paid? Are there claims or things that are unclear that have to be sorted out by your estate trustee? Again, a lot of fact finding here at this stage, which as you'll see is a bit of a theme when it comes to all of this. And then in terms of distributions, often for obvious reasons, the last step of the administration process, specific bequests. Those are gifts that are of a set amount. So for example, $100 to my cousin, that's a set amount, that's a specific bequest. That can be compared with what we call a residual bequest, which is, say, a portion of your estate. For example, 25% of my estate to my niece. That's the distinction there. Again, have to take care of all the final arrangements for distribution of the assets, likely get receipts from the recipients of the gift, and it's also really good practice and really important for your estate trustee to keep real good records and real clear records of all the money and assets going into the estate and coming out of the estate, just to make sure that they're completely transparent with the beneficiaries in regards to the type of work that they have done. How can you make the job easier for your estate trustee? Explain. Make sure that your presumptive estate trustee knows a little bit about the job, knows what they're getting themselves into. It may be a good idea to explain a little about the nature of the job. If you have certain professionals, such as a lawyer, an accountant, an investment advisor, etc., maybe a good idea to make an introduction so that they can help with the transition. And also tell your estate trustee a little bit about the assets. Where's the will? Are there any online passwords or things of that sort that they have to know? The less detective work that they have to do, the better. Once more, so I've talked a little bit about this already, but it's such an important point that it's worthy of repetition. So a good idea to have a list of assets, an inventory of your accounts and your assets for your estate trustee, because that can be an extremely difficult part of the role if they really don't know where to look. And again, I'm repeating myself a little bit from earlier, but make sure you check on it from time to time. People's assets change, people's interests change. Make sure that the information that you have handy is still up to date and is still accurate. All right, so let's talk a little bit about charity and how you can make sure that you can still give to charity and maintaining your estate goals. So it is a really good thing to think about and consider for obvious reasons. So it's not necessarily true that $1 to charity means $1 less to your family. And the reason for that is because in Canada, we have a very friendly jurisdiction and one that very much encourages charitable gifts. And the way that that's done is by providing significant tax savings when anyone gives to charity, including estates. You can actually support your favorite cause and even save tax while doing so. Lots of different ways, obviously, to give to charity. You can give cash, investments, life insurance. We're going to talk a little more about insurance in a minute. But any gift will generate tax donation credits for your estate. So what that essentially means is that if your estate owes tax and you have a credit, you can lessen payments by the amount of that credit. Again, I'm going to talk a little more about that in a minute. So once more, lots of different ways to make gifts. You can make a specific gift for a general purpose. Again, a specific gift being a set amount. I give $100 to charity X for whatever way they want to use it. You can make a specific gift for an explicit purpose. I give $100 to charity X to be used towards education. Or you can make a residual gift for a general or explicit purpose. So for example, once more, I give 1/3 of my estate to charity X for whatever reason they want to use it or however they see fit. Once more, a dollar given to charity does not necessarily mean $1 less for your family. And let's talk about why that is. So, lowering tax. I'm often asked first about the distinction between tax deductions and tax credits. The distinction is really important here. A deduction will reduce your income. So for example, if you make $100 and you contribute $20 to an RRSP, that counts as a tax deduction, which means CRA, for the purposes of your taxable income, will calculate that at $80. A credit, on the other hand, reduces your tax payable. So for example, if you owe $30 to CRA and you have a tax credit that's worth $10, CRA will say, well, we'll accept $20. That is the power of the tax credit. And tax credits are really useful because you can offset a considerable amount of your income by tax credits, as you can see here. Now, let's talk about some ways that you can enjoy and make use of these tax credits and charitable gifts. So one thing that you can do is designate a charitable beneficiary of certain assets. So if you name a charitable beneficiary of, say, certain assets, which I'll get into in a minute, the value of that gift will generate a certain amount of tax credits. I've also set out here that it allows an asset to pass outside of your estate. I don't want to get into that too much because that's a whole other can of worms, but that's something that certainly you can talk with your legal professional about. So if you have certain assets such as an RRSP, a RIF, pension funds, for example, you can change a beneficiary or name a beneficiary. You can even do so electronically now because of recent amendments to our law. So that makes it a lot easier to do something like that. All right, let's talk a little more about RRSPs and RIFs. So these are really noteworthy assets because generally speaking, the value of an RRSP or a RIF is included in income in the year that you pass away, which could trigger a huge taxable payable by the estate. So for example, if you have an RRSP or a RIF that's worth $300,000, when you pass away, CRA will treat your estate or you in the final year of your life as having made $300,000. So you're taxed on that accordingly, which could be a real large bill. So consider naming a charitable beneficiary if you're able to do so of your RRSP or your RIF. The benefit of that is that you can continue to use those funds during your lifetime. But when you pass away, the holder of that RRSP or RIF, whether it's a financial institution, an investment institution, will pay those funds directly to the charitable beneficiary. And the charitable beneficiary in that case will generate and give a tax credit for use by the estate. Another thing that you can do is consider giving a life insurance policy. So perhaps you have a life insurance policy that you got years ago that you don't need. Maybe you don't have next of kin. Maybe your next of kin, your kids have grown up. It's not necessary in the same regard anymore. It may be a good idea to consider donating the policy to charity. Once more, you'll get a tax credit for the value of the policy at the time that the donation is made. And you'll also get tax credits for the premiums you make in the future too. You can also name a charity as the beneficiary of your policy once more. So once again, the charity would receive a payment upon your passing, and the estate would receive a tax credit at that time, commiserate with the value of that payment. And again, that can be used to offset any taxes that your estate necessarily owes to CRA. Now, I like to talk about an example like this because it really shows the power of charitable giving and a special type of tool and benefit that you can use here. So consider this example here. Publicly listed securities or mutual funds have a very special type of treatment when they're given to charity here in Canada. So the benefit here is when you donate publicly listed securities or mutual funds to charity, the gain is deemed to be zero, which actually increases the value of your gift. So the best way to illustrate this is with an example. So say you earn or you own stocks that you purchased at a value of $10,000. And let's say you've done well in the market. They're worth $30,000 now. Let's say you sell that asset. So you've made a gain of $20,000. There's tax payable on that gain. Just some rough figures here. This is not meant to be exact, but let's say that the gain is about $5,300 here. So that has to be paid, which means you're not actually donating the full $30,000. You're donating about $24,700 by using this calculation. So the charity still gets a real nice gift, and you still get a tax credit of about $7,000, which is fantastic. But what happens if you donate the securities themselves, the stocks themselves, rather than selling it? What will happen here is that the CRA will deem the gain to be zero, which means you pay no tax, which means you donate the full amount of the $30,000, and you get a higher tax credit also of $12,000. Just by changing the characterization of your gift shows that you can really increase the value of that gift as well. So a real neat example as to how you can maximize your charitable giving. Want to talk a little bit, just as we're coming to a close, about donor advised funds. This is, again, an interesting tool that you may find that fits your profile, fits your wishes as well. Perhaps you want to give to charity, but you may not know at this point how much you want to give or which charity you want to necessarily benefit. So the way it works is that you transfer certain assets, whatever assets, to a trust in your will. And because you are donating to charity effectively, you get a tax receipt for the transfer of the assets. The funds are invested, but if anything is earned, any income is made, you don't have to pay tax on the gains, and it's your representatives that ultimately choose how the funds are to be distributed. So again, it necessitates some faith in your choice, but it's a nice little tool if you are so inclined. So in conclusion, really good idea to think about your assets and your holdings, and once more, really good idea to ensure that all of the information that you've left for your next of kin is certainly up to date. Think about who you want to pick as a potential estate trustee, thinking about all the things that I've mentioned today. And you may even want to discuss your wishes and intentions with your advisors, your representatives, perhaps even your next of kin, if you're comfortable doing so. And lastly, consider how you can leave a legacy and how charitable giving fits within your estate plans. And once more, to repeat myself, $1 to charity does not necessarily mean $1 less to your family. So I always like to end my presentations with some examples of some strange wills from history, just to illustrate that you can really do anything within your will. And I hope you'll get a bit of a kick out of these examples, as I have myself. So the first is John Bowman. He was a resident of Vermont. He was quite wealthy, but he did believe that his family would be reincarnated together. He very strongly had these beliefs. So when he passed away in 1891, his will established a trust for paying his custodian to come back and to prepare and serve dinner every night, just in case, I suppose you never know, in case the family comes back together. And believe it or not, this went on for 62 years, carried out until 1953. Jacques Benny, he was a comedian. He planned in his will to have a single red rose delivered to his wife every day, and she indeed received a red rose every day for 9 years, believe it or not. And lastly, Ani Nurmi. This was an individual from Finland who invested in a small rubber company. He passed away in 1962, and he gave the shares of that company to a small town to be held for the elderly, with very explicit instructions that they couldn't be sold, which turned out to be key. So probably a good time to mention that this rubber company transformed itself into a company that you may have heard of called Nokia, a tech conglomerate. And as it turns out that his gift, which originally looked like it would have been in the 5 figures, ended up being worth in the 8 figures. So I suppose you never do know. I want to thank you all for following along today, and I hope you've been able to take something from this. Thank you very much.
Wonderful. Thank you, Matthew. So we have quite a few questions, which I'd like to hopefully touch on, and we'll do our best to cover all of them. So I'm going to go in order. I had a couple of previous questions that came up, and I'll start with those. Donna asked, I'm interested in getting into info on putting our home in a family trust for our children. And the second was also regarding trusts. This was from Bill. It said the pros and cons of establishing a trust for children, grandchildren versus naming them in a will as inheritors. For example, cost of establishing a trust versus cost of inheritance, tax for property and assets. What's the best for small or large estates?
Okay, so I'm going to preface some of these answers with a common phrasing or words that I'm going to use likely for many of these questions, which is it's always a good idea for you to go and get your own legal advice. Every situation is different. Every situation has its own pros and cons. I can give general input on what I think might be preferable in certain situations, but always, always, always a good idea for you to get your own legal advice. So trusts in particular are a bit of a tricky one because they can be complicated. So trusts are not a separate legal identity like corporations, for example, but they're special in that they're treated differently. You have to, trusts have to make their own filings to CRA, for example. They have their own taxation rules. It can be very specific in the sense of whether it works for you. So some people like it because it avoids probate fees. I know we didn't talk a lot about that today, but if you do have questions about that, certainly that's something that you can speak to your legal advisor about. But trusts are generally more private also than wills, which often find their way into the courts or into the public sphere. If you're a little jittery on that possibility, a trust might be a good example or something to keep in mind. And you have a little more flexibility sometimes when you're dealing with trusts as well, depending on how you set it up. Again, if you're using a trust because it's treated as something separate altogether and you transfer your assets to a trust, you lose that type of control though during your own lifetime. So it may depend on your personal circumstances to work out whether it's something that may actually be beneficial for you or if it's something you want to leave aside. So again, I know I'm stressing it here, but I think the point is so absolutely key. You need to speak with your own legal professional about it because every situation is going to be very, very different.
Right. Okay, the next one, I think it's a common question. Are there differences between provinces? I'm in Alberta, that's from Ruth.
Yeah, there often can be differences as between provinces. Some of the things I talked about today, for example, income tax, CRA, that sort of thing is pretty general over Canada because it's a federal regime, of course. But every province will have their own, or every territory will have their own certain quirks and restrictions and things to keep in mind when it comes to will drafting and estate planning. So may not necessarily be a good idea to follow the advice or get advice from someone who's out of province or out of territory for you.
Here's one. Suggestions how to pass on a cottage to children and minimize capital gains tax.
Okay. So the cottage is always a tough one, always a tough one. It might be a good idea to think about whether, depending on circumstances, whether your cottage can be characterized or be classified as a principal residence. So in case you don't know, certain properties are exempt or have exceptions for tax treatment when you pass away. And your home, in which where you live, if you own your home, is one of them, generally speaking. So a cottage as a secondary residence often doesn't qualify, but if you can set up your own affairs such that your cottage is your primary residence, that might be something that may work for you. Some cottage properties also, this may heavily depend, but some cottage properties are set out in our land registry in different parcels. And it's just the way it was necessarily organized, perhaps many years ago. But what I have heard of is some people transferring certain parcels, certain areas of the land separately over a period of certain years, so that your tax in any given year may not be as astronomically high as it would be if you transfer everything at once. So that doesn't really work for everyone. It depends on the specific circumstances. So circling back to what I said before, you might want to get your own specific legal advice, but those are some ideas that you might want to at least look at, think about, take to your legal professional. Hopefully they'll be able to help you.
Does children mean dependent children?
So I think that question was likely with regards to what we call intestate succession, or what happens or who gets your estate in the event that you don't have a will. And in one of my earlier slides, we set out that if you don't have a will, your next of kin being your spouse, perhaps, and then your children would receive your estate. So it doesn't matter in that circumstance whether your children need the money or they're dependent or not dependent. If they're in that degree of next of kin, they are entitled to collect. And that's in the situation where you don't have a will. So again, the situation means that the decision making is taken out of your hands. It's gone from your control into the government's control. So another good reason to have a will.
Okay, another, I think, common question. If a couple is legally separated and has been for years, would someone's former spouse be granted their assets in the absence of a will, assuming that the former couple had children under the age of 18?
So this is actually quite a timely question. So until a couple of years ago, there was no distinction in the law between married spouses and separated spouses who had not yet gotten divorced. That's changed since 2022. So again, you might want to look at it specifically in Ontario. I can only say in Ontario here. The rules might be different elsewhere, but in Ontario, there is a distinction between married spouses and separated spouses. And in certain circumstances, separated spouses will not receive any more under our Succession Law Reform Act here in Ontario. It might be different in other provinces. So that circles back to the other question before. But here in Ontario, if you are separated, it may be that if your separated spouse passes away, even though you are not divorced, you may not be entitled to a share of the estate. And that's a new change here in Ontario.
So, my spouse and his brother are partners in a business. In the event of the death of one of them, would the other partner receive his share or would it go to his family?
So that could very much depend on the makeup and the characterization of the business. Certain businesses sometimes have shareholders agreements. Sometimes they're owned by a corporation in which the operators or owners of the business may have shares of that corporation. It really does depend. I don't like saying it depends as an answer to these questions, but in this one, it does depend. It really depends on how the organization is set out. Because frankly, I can see a scenario in which lots of different things could happen. So again, a good idea to speak with your legal professional about that.
If you name a beneficiary for RRIF or TFSA, is it taxable at death?
So I'm going to start with an RRSP or a RIF. The TFSA I want to leave aside because it can be a bit complicated, but the way an RRSP or a RIF works here is that if you name a beneficiary, the beneficiary gets all of the assets. However, RRSPs and RIFs have a special type of tax treatment, and it's not all that beneficial. So the value of the RRSP or the RIF is treated as income in the year that you pass away. So if you have a $200,000 RRSP or RIF, for example, and you name a beneficiary, say a friend or family member or whomever, really, they get the money. The estate is left with the tax bill. So you are treated as having $200,000 of income in the year that you pass away. That's why a lot of people do like naming a charitable beneficiary of your RRSP or your RIF, because in that case, you've made a gift of $200,000 using my example here. And then that can be used to offset your tax payable, which you know is coming because of the treatments of RRSPs and RIFs. So that's a unique one, and that's certainly something to keep in mind.
Okay, here's a charity related. So, two questions. One, how about giving an ETF to charity? Do the same rules apply? My aunt left everything to a long list of 30 charities, some fly-by-night ones, nothing to family who went out of their way to help her, and some of whom could have really used for her help. These charities ended up fighting for their share. It was lots of work for the executor and the lawyer. Wouldn't you say that it is better to choose a select few charities?
So I think the ETF question, I think that was likely with regard to the section that I spoke about before, giving publicly listed securities to charity. I haven't seen ETFs used, but I believe that they do qualify. You may want to check on that because I'm not certain, to be completely honest, but I do believe that they do qualify. In terms of naming charities, that's always a difficult one. And I find, for me, it often comes down to preference. You never know how anyone is going to react when they're named as a beneficiary to your estate. You may have an issue if you name one or two beneficiaries, and you may have no issue if you name 50. Really, I think the guiding principle should be who you want to benefit, and everything else has to fall into place based on that. You don't know what's going to happen. All you can control, at least in my view, is who you want to benefit and who do you want to receive a gift. I'm not sure anything else can really be anticipated to a great degree other than that.
Should you get your will notarized?
So wills are funny in the sense that a copy almost never is of use. Now, that's a bold statement. I want to back it up a little bit. So really, the most important thing is making sure you know where the original of your will is. Copies of a will can be used if the original can't be found. However, to tell you from experience, it's a bit of a slog dealing with copies of a will if you don't have the original. So I'm not sure it necessarily is a requirement to do something like that. Making sure you have a true copy is always a good idea. Making sure you have soft copies can be a good idea. You only have one original of a will. And the most germane consideration is you got to know where that original is, and make sure you pass on the information to who your estate trustee is going to be when it comes to the original of that will, because that's paramount.
Okay, I believe you touched on this, but is there tax payable on money you received from an estate?
Not for the recipient, generally. So tax payable by the estate and by the giver, yes. And we talked about that a little bit, but generally speaking here, you don't have to pay tax on what you receive. The bill goes to the estate, to the deceased in this case.
Can the executor step down from their role?
Yeah, so that's a good question. So really by way of policy here, nobody can essentially be forced to be an executor for obvious reasons. It can be a difficult job. Certainly, you're entitled to step down, retire, renounce, et cetera, et cetera. The issue is really a practical one more than anything. Most executors don't want to end their role unless they've gotten some type of assurance or sign off from the beneficiaries, the recipients of the gift, that everything they've done is proper. There aren't any outstanding questions about what they've done with the money. and will oftentimes, the executor, I should say, will ask for a release, which basically says you can make no claims against me and everything I've done is acceptable. So can an executor retire or renounce or step down? Sure. Practically speaking, it's often a bit of a negotiation and back and forth between the beneficiaries, depending on the state of the estate, stage of the estate administration, and that may dictate what the executor is going to do from that point forward.
Okay, I see two probate questions. What is a probate, and do you always have to apply for probate, and why?
Okay, so probate can be a topic unto itself. So I'm going to try and give a short version of what probate is. So basically, probate is the process whereby you get court blessing of your will. So what will often happen in that situation is that when you pass away, your executor will take the will, will fill out a whole bunch of documentation, will collect a death certificate or a proof of death, and submit all of that to your local court. And this is generally how it works in Ontario, so it may be different in other provinces or territories. Once the court receives all that documentation, if there's no objection, for example, to the will, the court will put a big fancy stamp on it, and that is probate. That's your, basically the reason why I called it court blessing is because once the executor gets back a copy of your will, or that will with the fancy court stamp, that is the rubber stamping, or I shouldn't say quite like that, but the blessing of the authority of the executor to act. And oftentimes it's a practical thing to do because many banks, financial institutions, investment companies don't want to deal with the executor unless they have probate, unless they have that fancy court stamp. Is it required in every circumstance? It's not in every circumstance, depending on the type of assets that are held, depending on the nature of the estate. Again, practically speaking, oftentimes it's a good idea to have. And I found that many executors, many estate trustees do run into a roadblock and a speed bump if they don't have probate. So one thing I should add about this, again, trying to keep in my tight definition of what probate is because it's a court service and because you are asking them to do something for you, to stamp the will, there's a charge to it. And the charge is about 1.5% of the value of the estate, subject to gifts under the will here in Ontario. So again, it may be different in other provinces, but just to give you a baseline as to what it is in Ontario, it's about 1.5% of the value of the estate. It's a little bit less actually because the first 50,000 or first share of the estate is not subject to that fee, but that's why people, or you may have heard of people trying to avoid or minimize their estate or try and not have to go through probate, and usually it's because of the charge. So that's a, you know, I could give another presentation just on probate itself, but that is the quick and dirty overview of what probate is.
Okay, so I'm just in essence of time, we're looking, we have 5 more minutes. I just want to say again, if you have any charitable donations related questions or any inquiries about Diabetes Canada, please, I did put my contact info again in the chat, and feel free to email me, contact me, call me. I'm happy to chat with you, definitely. I'm trying to see a couple of other things. If there's any questions in terms, I see a question about, you know, putting your thoughts in order. We do have, like I said, a will guide, and Matthew mentioned that as well. I put the link in the chats as well. So if you'd like to request one, please do go ahead, and that will help you put everything down on paper in front of you, and you can take that to your lawyer and your estate professional who you are using. Would you recommend the online tools as a way to organize one's thoughts if you've never created a will before? So that's that. There's one question that is similar to that. Can a lawyer be executor advantage, disadvantage? If so, thank you. You've touched on that as well, but if you want to touch on it again, please.
Sure. So in the presentation, there was some discussion about using a professional, and lawyers are included in that characterization. Lots of lawyers do this type of work as well. It's the same pros and cons, that I talked about before. So the short answer there is yes.
And can I name one of my children as my estate trustees? Yes,
Sure
that
can.
is
Sure can.
definitely. Does will and trust have to be notarized by a lawyer together?
Does a will have to be notarized? So there are actually here in Ontario, there are very few formal requirements for a will, believe it or not. You can actually handwrite your own will here in Ontario, and so long as it's entirely in your own handwriting and signed, that's called a holograph will, perfectly valid, without any witnesses. If any portion of your will doesn't have your own handwriting, if it's typewritten, for example, you do have to have it signed by two witnesses who do not benefit under your will. It's a whole issue if you have one of your beneficiaries witness your will, because technically it can invalidate their gift. You don't want to have to go through that. But again, here in Ontario, so long as it's witnessed in person, it can be any two people, so long as they sign the right documentation. So it doesn't have to be notarized to be a valid will. It doesn't even have to be witnessed by a lawyer for it to be a valid will. Although, just to make things even more complicated, now we have other ways in which wills can be witnessed by video conference sometimes. I don't want to get into that too much, but you'll have to look at the specific requirements for that in your particular province. Here in Ontario, it's possible, so long as one of the witnesses is a lawyer. But again, the whole point of this answer is to set out that there are not very many formal requirements when it comes to making a will, which I find a lot of people are surprised to hear.
Okay, wonderful. And there's a lot of questions that we can keep going and going, and I certainly apologize to everyone. We only had this hour, but I'd like to thank everyone for coming. First of all, I'd like to thank you so much, Matthew. We're truly grateful for your insight and time today, and a big thank you to everyone who joined us. If you have any additional questions, please, again, you need anything information further, you need the will guide, please contact me at kate.hicks@diabetes.ca. And you can reach me there. I put it in the chats as well. I'll put it in there again. And feel free to contact me, call me. I'll be more than happy to help. And Matthew had his information up as well. And I wish everyone a wonderful rest of the afternoon. It was definitely very informative. People are very grateful from what I'm seeing, and I'm so sorry. There were so many more questions. We could have gone on for probably another hour. But like I said, please feel free to contact us anytime. So thank you,
Thank you,
Matthew.
everyone.
Have a great afternoon, everyone.